The market day started with an overnight sale, and this one was of soybeans this time around. 146,000 metric ton of soybeans selling to unknown destinations, but it was for the new cropping year, the 18-19 crop year. And now let's find out what's going on in the futures following that sale. The corn futures have been just kind of easing higher here today on this Friday as we get ready to go into the weekend, as well as soybean futures, but not so much for the wheat. Right now, we've got that front month of September. Corn is up 2 1/4 at $3.49. December up 2 1/2 at $3.63 1/2. I mentioned the gains in the soybean market. September up 3 1/2 at $8.45 1/2. And the November up 4 1/4 at $8.58 1/4. Wheat market, though, on the lower side. September Chicago wheat trading at $5.14 3/4. That is down 7 1/4, and it's a penny and a half off of the low. July is down 4 1/4, also at $5.66 1/2. September Kansas City wheat down 7 1/4, $5.20. Again, penny and a half off of the low. July down 7 1/2, $5.80 3/4. September Minneapolis wheat is down 6 1/4 at $5.75 1/2. July down 7 at $6.19 3/4. Yesterday was a lower day for the cotton market, but today we're back to the higher side. We're up 55 at 82.04. At the edge of the trading floor in Chicago, standing by to join us right now, is Scott Gecas. He is with Longleaf Trading. Scott, happy Friday to you. What's the mood on the floor today ahead of this weekend and then getting ready to roll the calendar and find out what's in this next world supply and demand estimate?
Yeah, everyone's going to be focusing on that with the supply and demand estimate next week. Pretty much everything is pretty much sideways today after those big moves yesterday. Big sell-off. You know, the crop tour was bearish just across the board. It was pulling all the grains down. Very bearish report for soybeans just across the board. It's pretty much a perfect storm in soybeans. 850 is a very major key support level. If we break 850, you're going to see a collapse. So we're going to see how that with the trade war talks. It just didn't materialize. They didn't do anything. Now everyone's waiting out on what's going to come out of NAFTA.
You know, one other thing that the trade is waiting on, of course, is that final number from the Pro-Farmer Crop Tour to be released a little bit later on today. So a little bit of a surprise there coming out of Minnesota on some of these crops. But could there be maybe enough of a surprise in this final number that would cause those soybeans to drop below that 850?
Yeah, I think if you're going to see right now, the August estimate for yields is around 59, which is really high. If we touch anything close to 60 or even more, you know, you're going to see a big collapse. You know, the crop tour tends to underestimate the yields. You know, they've done that in the past several times, so we're going to really see how this is going to play out.
All right. What about the dollar here today? Is that a player at all in some of these ag commodities?
Yeah, the dollar has been a driving factor for commodities just across the board. You see the big spike in the dollar. You see commodities come off a little bit. Any relief on the dollar, you'll see a little bit of a bump up in commodity prices as well.
And you mentioned that relief. We are down 560 points right now. We're trading at 95.030 on that September. The December is down 570 points at 94.590. So that certainly would coincide with what you commented there. Stay tuned. When we come back, Scott and I will be talking about the livestock trade, and we'll analyze all of that information coming up next here on the Marketing Report. Now, earlier in the day, we had the live cattle and the feeder cattle going in opposite directions, kind of spreading the distance there a little bit. Right now, we've got the live cattle still headed lower by $1.80 on that front August month, 106.15. October down 177 at 106.95. December fats are at 111.47. They're down $1.51. But I mentioned the feeder cattle market kind of heading in an opposite direction, but that has changed here over the last little bit. We've got September feeders now down 147 at 147.68. October down 180 at 147 even, and November down 177 at 147.20. So weakness all the way across the cattle board here at this point. Now, hogs are a little bit different story. They're all higher, with the October 77 higher at 51.95. December up 47 at 51.35. But then you get all the way out to February, we're up $1.57 at 61.55. And that optimism is also in the April contract. It's up $1.78 at 67.90. So let's go back to the edge of the trading floor and visit with Scott Gecas. First of all, the cattle market. Scott, I just received information here that we still need to clean up a little bit of show list on this cash cattle trade.
Yeah, the cash cattle trade, traded around 110, 111 today. That's a big difference from the other day when about 11,000 traded 108.5. Trade war talks didn't materialize. We're still waiting on news out of NAFTA. We're waiting. It could come out today, come out over the weekend. We're just waiting to hear from that. That's going to be positive for hogs as well as cattle. The cold storage report in cattle shows and confirms that there's a huge supply concern. There's around 485, which is the highest on record for a single month. We need to hold that 107 mark for any support to move a little bit higher.
Something you said, Scott, it kind of interests us. When it comes to maybe some of these announcements coming out about trade, as a trader, what are you hearing or what are you thinking when you go into a weekend like this where the markets won't be open, but we still could maybe get some kind of news that would have to be reacted to first thing Monday morning?
Yeah, and that's exactly the option market completely is deterring that. You can see the put-call ratio to the for hogs as well as a little bit in cattle. Not so much in the cattle, but definitely in the hogs. It's well to the upside. It's about almost a 4-to-1 calls to puts. That's a very significant factor. Usually people use options to protect their investments. So with the call-put ratio going from puts to calls, the risk is definitely to the upside. I've been talking about, especially with the hogs, the risk is going to be to the upside just due to it's been completely oversold. Now you have all the disease in China. The disease that is going through China, there is no cure for it. So that also is transmitted back and forth. Now, they had the fourth case of that disease reported yesterday, and it was over 100 or 1,100 miles difference from case to case, which means that it's spreading very quickly. Something's going to have to happen. Something's going to have to change. So I would look to see for a little bit of a bounce in the hog market.
That's pretty interesting. Scott Gecas, longleaf trading at the edge of the trading floor there in Chicago. Scott, thank you very much. Always good to visit with you. And he brings up a lot of points that really do point to variability and a lot of variability in these markets. And that's why I think we're seeing a little bit of this volatility here today.